So had he waited to purchase this policy today, he certainly would have had a better price point than the first day, but not as good as a price point he's getting today. Prashant was introduced to us 4 years ago by a dear friend and a client who I've known for many years. I was introduced to him solely from the purpose of him wanting to purchase a life insurance policy. We realized that he had a need for roughly about $10 million of life insurance cover. And the way we structured this contract was about $8 million of this policy was purchased as a universal life plan, which would last till the age of 100 to 121 even. And the payment term for that plan was just about 10 years. The balance $2 million of the cover had critical illness on it and was going to be running for a period of 35 years. So the idea behind this contract now was to give him a total cover of about $10 million till the age of 75, and beyond 75, that policy would scale down to $8 million of life insurance cover. On my first meeting with Prashant, we discussed the possibility of him becoming healthier. When he did the medicals for the insurance policy, a couple of things came out. He was physically fit, like the average Joe. He was a smoker, he did consume some alcohol, and he was getting a little heavier, a little slow, a little sluggish. And this is one thing that he wanted to change. The insurance company at the time just rated Prashant as a smoker. They did not charge him a higher than average premium, but they did charge him the average premium for a smoker. And to put this in perspective, the average premium for a smoker could be anything between 40 to 80% more expensive than a non-smoker. Prashant completely flipped the narrative on this. When he met me the first time, he told me about his intention to giving up tobacco and cigarettes completely. And the one way he decided to do that was to join endurance sports, triathlons, running, and things like that. This was a big focus for him. A big reason for him to choose to do this was to ensure that he would be there for his young family for as long as he possibly could. 2 years after buying the life insurance policy as a smoker, when I had my second review meeting with Prashant, he explained to me how he had completely been smoke-free or cigarette-free for over 23 months. And we decided to take that as an opportunity and go back to the insurance company and find out if they were now willing to offer him non-smoker rates. What the insurance company did instantly was take a statement from him and make him do what is known as a Cotinine test. The Cotinine test results turned out negative, which meant Prashant was indeed now a non-smoker. So instantly, the two insurance companies changed him from a smoker price point to a standard non-smoker price point. And a standard non-smoker price point is significantly cheaper than smoker. However, there was still room to better that proposition. As the years have gone by, we've urged Prashant to constantly get his health better and once a year reapply to the insurer for better price points and better terms of business. In the course of the next 1 week, we should be hearing back from the insurers that are reassessing his current medical situation. And we suspect that Prashant, for the same premium, can go from a total cover of $14 million to between $16 and $17 million by paying the same premium that he paid 4 years ago as a smoker. When Prashant first bought the life insurance policy from us, he was 38 years old. Prashant today is 42 years old, and in a few months he's going to be 43 years old. Had he not purchased a life insurance policy from us at 38, as a result of waiting for those 4 years to finish, to get to that right state of health and fitness, 4 years would have passed. That would have meant that his premium would have increased because now the insurer would charge him based on the age of 42 versus 38. But having purchased that universal life structure in particular at that age of 38 and just readdressing the health concerns along the way, his premiums today that are being quoted to him are still being quoted at the age of 38, just with a reduced price point simply because his health is getting better, or the class of risk for the insurer is getting better. In the last 22 years of doing this, I've come across numerous clients who purchased low-valued life insurance policies along the way and have now become uninsurable, maybe even in their late 30s or early 40s, and are no longer a prime candidate for insurance companies to offer coverage. If the insurance company are willing to offer them coverage, they're usually substandard terms at a price point which could be 100, 150, even 300 to 400% more expensive than the average person. In most cases, it's a polite way for an insurance company to say no, or they associate a very high level of risk with this individual. So time is critical because time determines health and aging, And that aging and that health factor is what determines whether you are the right fit client for an insurance company or not.